What's up you guys, it's Cameron here. In today's video, we're going to be talking about the top 2 stocks I'm going to be buying for July 2019. I'm going to be buying them right now at the end of June 2019 as well, but I got one extra surprise. Everyone and their mom on YouTube loves to do the top stocks I'm buying, whatever month, 2019. We're going to give you a little bit of a twist to it, guys. We're going to be talking about the 2 stocks that I'm going to be buying put options on for July 2019. This is going to offer a great opportunity to create quite a substantial return on your investment while still hedging a little bit of the risk out of it by buying long-term put options. Let's get into it. I'm super excited and super stoked to be sharing all this with you today on Young Money Investments. Alright, so as I was saying, guys, everyone loves to talk about the 2 stocks they're going to be buying in 2019 or whatever the month is. In this episode, we're going to go a little bit different here. There really wasn't a whole lot of other stocks in terms of the big boards, the big blue chip stocks that I could really recommend buying right now. I think we are currently at all-time highs on the Dow. There's a lot of reasons why I think we should be a little bit cautious, honestly and truly a little bit cautious. Because with the stock market being at all-time highs again, it begs the question, should we keep buying the highs or do we take a little bit more of a strategic approach to kind of hedge our positions, maybe see if there will be a pullback, etc., etc. So let's take a look at the first company that I'm going to be buying right now that I see as a good deal in July, end of June 2019. So taking a look at the charts here, this is going to be a company that I've talked about quite a lot, and that is none other than Tesla. Taking a look at Tesla, you can see obviously we had broke through support here at that 240 range. This is on the 6-month chart, 180-day chart. And we have seen lows of about $176, $177. But since then, we have had quite a nice little rally. Tesla has actually been able to rally nearly 26%. I mean, that's actually over 30% from its lows. And, I honestly and truly like this chart pattern. I love that we have been able to see, some resistance right through here at that $225 price point. We've seen previous resistance through here as well. We've seen it come down. We've seen it hold that 210 mark now. And then it also has been a previous level of resistance, which is now turning into support. We've seen it reach new highs. So it's creating not only highs, but it's creating higher highs. And we've seen recently a pullback as of today, which is June 20th, 2019. Currently sitting here at the SMA line. I love that it is actually holding this SMA line as well. That acts as another suggestion that we're going to be creating higher lows as well. That means that we are still on a very nice little uptrend pattern and should continue to see this start to work its way up until it gets to that $250 price point. So currently sitting at the price of about $219, $223. If you can get anywhere in that $225 to $220 price range on Tesla, I think you have a very good opportunity to buy into Tesla. Based on all the articles and everything that is coming out about Tesla, another reason that I'm really bullish on them is because of the fact that the quarter is looking very good. According to Elon Musk during the investor day recently, Elon Musk was saying that Tesla is in no duress in terms of production issues or basically anyone that is saying, oh, Tesla's having, basically demand issues. No one wants to buy a Tesla right now. Elon basically said that that is complete and utter crap. They are seeing a ton of orders. They're barely being able to keep up with the demand of the orders. And so that is very good news. And that is why we have seen Tesla really start to creep up here. Nevertheless, you do need to be cautious, obviously. Anytime that Elon is speaking, he's always very, very bullish and ready to burn the shorts on Tesla. But with that being said, I think Tesla really does offer a very nice potential for margin to be able to come up from that $225 price point to $250 within the next easily month or so. Company number 2 that I'm going to be buying July 2019 is going to be EA Games, or EA. EA is a company that I have been a long-term swing trader, long-term investor in for quite some time. I've been holding my shares of EA for several months, even through and buying through quite the long dip that the company has had. Currently, we're seeing quite a bit of consolidation, but more than just the technicals, I want to jump into a lot of things that the options market is telling us about EA, why it's a good buy, and also what the analysts are saying about EA. anytime, especially right now in the market, where you are seeing analysts pump a stock and say that it is a good buy, big investor money is going into it. And this is usually a sign where I would go, okay, you want to do what's opposite of what the analysts are saying. In today's market, you can't go against what the analysts are saying, especially in the short term, because it is going to continue to get pumped up. Big money is going to continue to come into that stock. And this is why I think EA has a very good opportunity to actually make you some money in a swing trade opportunity. So taking a look here at on Yahoo Finance, you can see the article here that says, do option traders know something about EA or Electronic Arts stock? We don't. Basically, the big thing to know right now, as it says up here, investors in Electronic Arts need to pay close attention to the stock based on moves in the options market lately. That is because on June 21st, 2019, which is actually incorrect because that's not possible. It's not even June 21st yet. $115 put had some of the highest implied volatility of all equity options today. What is implied volatility? You can pause this and read that if you're interested. What do analysts think? This is kind of the important part. So clearly options traders are pricing in a big move for Electronic Arts shares, but what is the fundamental picture for the company? Currently Electronic Arts is a Zacks rank number 2 buy in the toys, games, hobbies industry that ranks in the top 20% of our Zacks industry rank. Over the last 60 days, one analyst has increased the earnings estimates for current quarter, while two have dropped their estimates. The net effect has taken our Zacks consensus estimate for the current quarter from 19 cents per share to 2 cents in that period. Given the way analysts feel about Electronic Arts right now, this huge implied volatility can mean there's a trade developing. Oftentimes, options traders look for options with high levels of implied volatility to sell premium. This is a strategy seasoned traders use because it captures decay at expiration. The hope is these traders in that underlying stock does not move as much as originally expected. So if we do take a look at EA here on the charts, we are going to see that there has been quite some consolidation right around here over the past, I would say 2 months or so. As we take a look at the charts here on EA, you can actually see that again, it has found a very strong level of support down here previously, being right down here at the $90 price point. We can see again, this has even acted as slightly a level of support slash resistance up here at $92, $92.50, right in that range. If we zoom in a little bit more, you can most definitely see a little bit better how this has kind of acted as support and resistance. Being the fact that currently EA is trading right here at about 93.19, I feel like this offers a very good potential as an entry point. If we do see it come down here a little bit more, that's still a great entry point down here, about $1 cheaper. And then we can easily ride that up into this price point of the high 90s, offering about a 6% return. Honestly and truly, I could easily see this going to 100, where that starts to offer us about an 8% return on investment in swinging EA. Again, I'm actually fairly bullish on EA, and I believe that this is going to be a trade that could develop into bringing this stock well back up to the $115 price range, and even the 120s and so forth. I think EA has taken a very large beating over the past 6 months, 8 months or so. And EA does have a point right now where after this much consolidation, big money will start to move back into this arena. You know, Apex Legends and some of the game titles that it has come out with have done good and bad. You know, it depends on who you're talking to. I'm not a big gamer, but from what I've seen, EA has very strong fundamentals. The gaming industry is not going anywhere. This is a company that I like for not only for a technical analysis swing trade, but also based on the implied volatility of the options, as well as the fact that just the fundamentals are there in this company to be able to swing trade this even a little bit further out than, you know, maybe let's say 2 or 3 weeks or even a month. You could even swing this for maybe a couple months, but that is going to be my take on EA. Next company we're going to be talking about is none other than Snapchat. Now, Snapchat is one of those companies that we have honestly and truly not been the biggest fans of here at Young Money Investments. Snapchat has it went from its IPO down, pretty much bottoming out right around $5 a share. Snapchat really has not been the best managed company, has not been the best run company. Not a big fan of the CEO. He's kind of a cocky, arrogant, you know what. And honestly and truly, I'm not a big fan. I will say this though about Snapchat. Snapchat is one of those platforms next to Facebook and Instagram as pretty much like the go-to app for millennials. It's a go-to app for a lot of teenagers in terms of, you know, social media interactions. And I think this platform has a lot of untapped ad potential and ad spend that can help boost the company's bottom line. With that being said, we need to take a look at the charts, and I'm going to explain why I believe it is time to buy some $12 puts with a strike price of $12, and I'm going to explain what time frame I would be buying those puts if I was getting into Snapchat. Let's talk about it. All right, guys, so taking a look at the chart here on Snapchat, you can see, as I said, it hit lows of 482 and currently has hit highs of $15. Now, could we see this definitely run up to the $17 price point? Yes, it's very possible that we could see that. With that being said, I definitely believe that this is very overbought and has gotten into that overbought territory. We do see this nice little double bottom that has formed right here if we do zoom in a little bit more, and then we see this little push up. With that being said, I do believe we are hitting that dollar, or that arbitrary value of $15, which is causing this stock to most likely kind of bottom out and need to have another pullback down here into that $13.50 range. That kind of a pullback is about an 8.799% pullback. And the reason I recommend using an options trade on this and putting it out to about August 16th is when I'm going to say the strike price when you should have these options expire, is so it gives you a little bit of time. So giving it some time to expire with a strike price of $12 on August 16th is going to give you the time you need, but also it's very, very possible. I mean, coming down to that range, I mean, yes, that's a large drop. But again, in reality, guys, this company just literally in December was trading all the way down here at $4.82. So not a very good sign, because I mean, that kind of a run up is, I mean, we're talking over, I think it's 204%. That is a large run up. Taking a look at Snapchat on the 1 year chart, this is where it really does start to get interesting and it starts to make a little bit more sense here. Looking at that run, I mean, you can see after it had just really careened down, you can see where this resistance slash support at $13.50 had even acted as previous resistance about a year ago before it started to come down. So being up here at $15, this gives one more reason and one more fact and kind of arrow in my arsenal for why I think we really should not be getting into Snapchat and why these put options are really going to be of most value for Snapchat right now. All right, guys, and last but certainly not least, in the companies that I am looking to buy put options on and have bought put options on is going to be none other than BYND, or Beyond Meat. Now, this is a company I did a video on recently that I've not been the biggest fan on. Beyond Meat, honestly and truly, has a insane valuation right now. The spread on this company is stupid. A $10 billion valuation when Wendy's has like a $4.76 billion valuation is just crazy to me. That this company is not nearly worth what it's currently trading at. We've seen highs of $202. We're currently sitting at about a stock price of $170 a share. This is a company that I firmly believe is overhyped, overvalued, and really should be valued somewhere right around $45 to $50 a share, like its IPO price. With that being said, I understand hype. I understand people get into stocks. But if you are buying this stock to buy and hold at this price where it's at right now, you are insane. If you bought it at the IPO and you're swinging it up, this is a good time to cover your position. And I really do think smart money is going to start to get out of BYND. And that is why right now is the very best time to be buying put options on BYND. If we take a look at the charts here on BYND, you can see here on the past 180 days, IPOing down here at $45, it has just continually ran up and up. Earnings reports came out, it was crushing earnings. It's been doing these PR stunts recently where they are PRing that they're increasing their partnerships with Del Taco and some of these other fast food chains. This cannot last. This kind of a run cannot continue to happen, and that is why I'm very, very negative on this. You can see kind of a level of support slash resistance kind of forming right through here at that $175 price point. I do not believe that we should be seeing this get up to this price point anymore. Maybe we will, maybe we will see it back up here, and I think this is a great spot to be buying put options on BYND. They are going to be expensive though, that's for sure. Now, if you're looking at buying put options on BYND, the current two options that I'm holding are $100 strike prices, one with an expiration date of September 20th, and then another one with a strike price of November 15th. I also believe I have one that does expire on June 28th, which will be soon. I'm going to take a loss on that one, unfortunately. That is going to cost me a couple $1,000s on that put option. I did not expect the massive run. This was pre-earnings. So I'm definitely going to take a loss, but right now I'm really starting to see where BYND is not able to support this insane valuation on this company. So this is going to be a long-term put option that I'm going to be trading on BYND. Definitely where I'm breaking even. I don't see it breaking down all the way to $78, at least in this current month. I don't think we're going to see a sell-off of nearly $100 from the share price. But if you are able to get that option here relatively soon, especially around $175, you should be able to make a substantial profit on this option trade and be able to get out before the options expire in September or in November. So that is going to be my take on it. If you have any questions, leave them down in the comment section. I do go over these trades, my entries and exits, in my private mentorship. Feel free to check that out. If you've not hit that subscribe button yet, please hit that subscribe button. Hit the like button. That helps me out tremendously. If you made it through this video this long, must mean you like the video, I'm hoping. But anyway, please do all those things, and check out my links in the description if you're interested in anything else. I will catch you guys in the next video. Take care. Bye, guys.